years back, they were in the bid for Valtra, which was a massive bid that they had considered. If you look at Tractor, so they have this track record of going after global companies, big bets. The tractor segment is one where they have, it has probably been left behind in the scheme of the other businesses. If you look at components, for example, they have been far more aggressive. If you look at cars, they have done a tie-up with Renault. If you look at UVs, they have the Scorpio, they have the export side there is doing very well. The tractors, to that extent, hasn't seen the same amount of aggression. So to that extent, this news flow would probably fit into the kind of game plan that they've got.
Should focus a little bit on Balaji also. On current market price, Star's 26% exit would fetch them about 292 crores. Obviously the transaction would not have been done at current market price, probably a little bit of a premium, but would definitely trigger an open offer if this entire 26% stake.
They buy it at 190 per share. That is the indication.
Okay, then that basically gives you the indication
so
of the transaction.
That means Balaji is paying above the market price. Market price I think is 175. That's the way the stock.
So that's a 322 crores
above market price.
But I think the market will probably be a little more excited by the fact that if this entire 26% block is being picked up by someone else, it by mandatory standards triggers the open offer, and that probably have the stock excited today
won't be buzzing
as well. So there's no question. Now, Mehraboon, do you track Balaji, and what have you made of this news that Star and Balaji have decided to part ways?
Well, I won't state, Rahul, that I am very surprised as to what has happened. And regarding the premium that the company management is offering, a 10% premium to the present market price also is something which I'll be honest to admit that I'm not very surprised as such. As far as our call, as far as the media sector goes, we are quite positive, but I think we are quite positive for the next 2 years. Like if you're going to buy now, you should be buying possibly for 2010. And I think there are quite a few interesting plays as far as this particular segment goes. As far as the media pack goes, whether it's a company like UTVI, which is, I think, planning very aggressive things as far as the gaming segment goes, a step with Walt Disney. I think it's an interesting story. Balaji is something which, yes, we have tracked a little bit quite closely, and I think we were interested in possibly buying shares for our clients at around 150, 155 levels. We possibly have missed out, but there is the stock which is quite close, quite dear to me, and I personally would rate it in my top 5 picks in the media segment even now. And I think this particular announcement is not going to change my view in any possible way.
Right. Mehraboon, just to understand this better, the JV between Star and Balaji is part of a subsidiary of Balaji, right? I mean, because it's the one that takes care of the regional business. So will that actually trigger any kind of open offer if they're looking at a stake buyout there?
I possibly think yes, it could definitely happen, but I think that there could be some more clarity coming maybe in the next few hours. So I think it will be a little bit early on my part, and considering the fact that we have definitely a little small holding in this particular company. Beyond this point, till the time some more clarity comes, I don't think I don't deem it fit to possibly comment more on this particular thing. But yes, an open offer is something which I don't think is ruled out at the moment.
Right, Mehraboon, we'll of course try and get you the entire breakup of Balaji's shareholding pattern to try and figure that out.
Mehraboon, what's your own thought on the overall mid-cap IT space at this point of time? I know you've tracked a lot of them over the past few days. You will be speaking to the management of Mindtree in just a bit. But any of them looking attractive to you on a valuation basis?
Definitely, yes. In fact, quite a few of them, Rahul. And allow me to say that it's becoming an enigma as to why the stocks are going at the present valuations without too much of attention coming to it. But I have always believed that sooner or later, ultimately, the valuations will catch up, or rather, I think attention will come back to some of the stocks. I think look at a stock like a Geodesic or a Tanla Solutions, at the valuations at which they are going, considering the fact that the growth that they have gone on coming out at quarter on quarter or year on year. I think the growth has been good, and I don't have any reasons to feel that the growth will falter over the next few quarters. So there are quite a few interesting stocks in the mid-cap IT segment, especially in some of these IT product companies. 2 of them I have named to you.
Right.
Meanwhile, Balaji has gone to 184, so that's a 7% move up for that stock within kissing distance of that price at which the transaction was done at 190. So probably that open offer price will get a lot of people excited. Mehraboon, your thoughts on real estate, specifically stocks like, not the frontliners, maybe like a Parsvanath or an Omax or a Purvankara. Have you tracked any of these smaller ones?
Well, Rahul, we had tracked quite a few of these companies in the past, but at the moment, looking at the way the situation is as far as the sector goes, I think we have decided to focus more on some of the frontline companies, and quite a few of these names have gone out. But there are some interesting names coming up in this particular segment. I think besides DLF and Unitech, a company like Indiabulls Real Estate is the stock which I personally feel. Besides traders, where I think frankly, too many opportunities available for traders looking at the way the stock remains quite volatile, even intraday basis. But I feel at lower levels, this stock possibly provides a decent opportunity for people who feel interest rates will peak out sooner or later.
Yes, Mehraboon, earlier in the conversation you said that you would look at buying into the banking and financial space here if they open on a weaker note. Tell me what makes you...
I think my top picks I mentioned very clearly. I think the qualification to my remark was that I'll be very selective as far as the sector goes. And I think the 5 banks I would possibly look at would be HDFC, HDFC Bank, Reliance Capital. If I had to buy a PSU bank, I think at the present valuations, looking at all the particular ratios attached to the way you value a particular bank stock, I would look at possibly a Bank of India at the present level. And if I rank outside, I have to pick up a virtual rank outside, it would be a stock like Federal Bank. So I've given you all my top 5 picks as far as the banking sector goes. As far as the other interest rate sensitives goes, I think I would prefer the financials first and then possibly look at something like real estate second and an auto third, because I personally feel there is still some more pain in the system. But as I always believe that there is level to which things can fall, and I think as I had mentioned at around the 13,000 levels, possibly we are reaching possibly the climax as far as selling goes. So after the sharp 3,000 points rise, this particular fall, I personally feel a little bit more of a fall, and quite a few of these interest rate sensitives may become a decent investment option for people with deep pockets and are ready to possibly wait for the next 2 to 3 or 4 months, because another sharp rise over the next 2 to 3 months, maybe it may falter a little bit more. You cannot catch stocks at the bottom, but I think over the next 2 to 3 or 4 months, this stock again may end up giving you positive returns, and that's why, coming back to your question, I'm a little bit positive on this because I'm ready to do the waiting game.
Right. Mehraboon, of course, we also have the technology pack seeing some bit of a revival of interest. Also steel stocks, some of them like Tata Steel seeing some buying action. What is your own sense on the steel side, specifically considering that the input costs are going up substantially?
I think when Rahul was mentioning about commodities, or he asked me on commodities, I said if I were to select one thing which I'm going to be possibly a buyer at lower levels, it would be steel. And I personally, if I were to rank between the two, I would possibly rank a little bit photo finish, I would say. I would place SAIL ahead of Tisco as far as the present prices goes. I personally feel SAIL would be a great buy if it comes down to around 120, 125 levels. And Tisco possibly, I would possibly look at around 550, 575 levels to possibly buy into this counter. But yes, I would possibly rate SAIL ahead of Tisco, and SAIL could be on my buying list if it falters another 10% from here.